Trade with clarity.
If you trade the 5-minute chart for direction, you're basically driving with your face pressed against the windshield. Every wiggle looks like a turn. That's why beginners get chopped up, overtrade, and chase. Today, I'm giving you a top-down process that outputs 4 things: one directional preference, mapped trade locations, a target ladder, and a hard rule. The 5-minute chart only triggers entries at mapped locations. And if you're thinking, okay, but what's the entry? Good, that's a separate skill, and we'll handle it cleanly next. Before the start of each day, you build a map. Same as driving somewhere new, you don't just feel it out turn by turn. You map the highways, the exits, the construction zones, and the dead ends. Trading's the same. Higher time frames build the map. The 5-minute chart tells you when to act inside that map. Write this down. The map decides the where. The 5-minute decides the when. Here's the locked stack: daily, 4-hour, 15-minute, 5-minute. Daily tells you the market type and whether there's room for a runner. 4-hour sets the directional preference and the line in the sand in validation. 15-minute builds the rails and scenarios for the day. 5-minute executes at mapped locations only, using your entry trigger model. Mine is Clear Plus, and that's the next video. No indicators, no clutter. Clean map. Step 1. Daily chart, 1 to 2 minutes. This is your state map. You answer 3 things. First, market type: trending or balanced over the last 5 to 10 days. Second, your daily swing box. The most relevant daily swing high and daily swing low price is trading inside. That's your container. Third, location. Are we near the top, bottom, or middle of that box? Then one optional decision: previous week high and previous week low. Only in play if it's realistically within reach and the daily and 4-hour context suggests expansion. If not, say it out loud. Previous week high and previous week low are not in play today. That stops distraction. Step 2. 4-hour chart, 2 to 3 minutes. This is where you lock the directional preference. Ask one question: what's the structure? Higher highs and higher lows means bullish, so you keep a long-only preference. Lower highs and lower lows means bearish, so you keep a short-only preference. Neutral or overlapping means no forced bias. Treat it rotational until the 15-minute proves acceptance. Now mark 2 things. First, the line in the sand, the 4-hour swing that would break the current structure story. Second, external targets, the last meaningful 4-hour swing high and 4-hour swing low. Those are the real higher time frame magnets. If the trend is clean, draw one primary 4-hour trend line, wicks swing to swing only. If any wick or candle body crosses it, it's not your line. Step 3. 15-minute chart, 3 to 5 minutes. This is where you build the day map. Mark your rails and key levels: overnight high and overnight low, previous day high and previous day low, nearest meaningful 15-minute swing high and 15-minute swing low. Optional, one 15-minute acceleration trend line only if the slope clearly changed versus the 4-hour line. No extra spaghetti. Then label the day with one word: trend, rotation, or transition. Now the definition I use: overnight high and overnight low, midnight to open. That's 12 a.m. Eastern Time to 9:30 a.m. Eastern Time. Then I lock those rails. If you use a different session template on your platform, match it to Eastern Time so your levels line up. Now you write 2 to 3 if-then scenarios. This is your directions on the map. Rotation plan: if we sweep the overnight low and reclaim, I look long back toward mid-range, then toward the overnight high. Acceptance plan: if we break and accept above the overnight high, I look for continuation in that direction. Previous day plan: previous day high and previous day low are primary magnets. Expect reactions, sweeps, or break and hold behavior there. And you define the target ladder. First objective is usually previous day high or previous day low, then the nearest 15-minute swing, then the 4-hour external target, then previous week high or previous week low only if it's truly in play. Step 4, 5-minute chart. Execution only. The 5-minute is not your map, it's your trigger finger. Valid trade locations on the 5-minute are only previous day high, previous day low, overnight high, overnight low, the 15-minute or 4-hour trendline zone, and key 15-minute swing levels. If price isn't at a mapped location, you don't get creative. You wait, because boredom trades are just you driving in circles. I'm going to be straight with you. I haven't taught Clear Plus yet, so I'm not dumping the whole trigger system in this video. Just know this. The map decides where, your trigger decides when. My trigger model is Clear Plus, and it's coming next. For today, here's your temporary rules so you don't start freelancing. First, price must reach a mapped level. Second, you need a close that proves acceptance, not just a wick. Wicks tell you stops, closes tell you acceptance. Third, you enter on the retest hold or a clean reaction candle, and only if you've got room to the next target. That's it. Simple. Repeatable. No boredom trades in the middle. Now let's prove it with a rotation day. Before the start of each day, your map says the midnight to open, overnight high, and overnight low rails are tight. The 15-minute overlaps, and the 4-hour is neutral. That means rotation until acceptance. So you stop taking random mid-range trades. You wait for the edges. Sweep the overnight low and reclaim gives you a clean long back toward mid-range, then toward the overnight high. Sweep the overnight high and reject can give you a clean short back down. Same day, same rails. You're trading boundaries like guardrails on a mountain road. Now a trend day. Daily says we're not stuck in the middle of the box. 4 hours shows clean structure. The map has space. On the 15-minute, price breaks above a key rail and gets acceptance. Closes hold, retest holds, then continuation. That's when you stop thinking rotation and start thinking trend logic. And notice what didn't change. You still waited for a mapped location and you still used your trigger rules to enter. Same map discipline, different road conditions. Risk and management stays simple. Use structure-based stops, usually within about 20 points. If structure demands 26 to 30 points, you don't pray harder. You reduce size so risk stays consistent. Targets follow the ladder. First intraday magnet, then 15-minute swing, then 4-hour external target. Runner only when you have clean space. That's not being cautious, that's being professional. Here's the chop filter that saves accounts. If the 15-minute overlaps and price is trapped inside the midnight to open, overnight high, and overnight low rails, assume rotation. Trade edges with your trigger rules, or stand down. Avoid mid-range boredom trades. Your edge isn't in the middle. The map already told you where the danger is. Listen to it. Lock the rule. If it's not at a mapped location with a valid confirmation trigger, it's not a trade. Before the start of each day, build the map. During the day, follow the map. The market doesn't reward activity. It rewards correct decisions made in the right places. If this helped, subscribe to Arctic Wolf Trading. Next week, we move from structure into execution with the Clear Plus entry method, step by step. Same rules, cleaner entries.